Ladies and gentlemen, I have thought of an idea, and I think it's gonna be unbelievable, and I want to show you. Basically, I want to make a trading video game instead of Robin Hood, where you pick the apps and it's you can see the graph and you can see kind of what's going on. I'm gonna make it completely different. It's gonna be the same brokerage. But instead of seeing what is really going on, it's formatted differently, and it's formatted as in a little video game. Um, and it'd be formatted like a surfing arcade-like two-dimensional video game where it's um, waves. You can see, so you're in an ocean and you can see waves coming in. Um, I can draw a picture. I can probably draw a picture. I'll draw a picture for you. So basically, um, this is an ocean, and you are on board. You are on board a surfboard. Okay. You're on board a little surfboard. You can't really see it much, but it's okay. Um, and you see waves coming in. In the distance, you see a wave. Like this is a bigger wave. Oh, okay. But back here is like, oh my gosh, a tsunami wave down here. I might want to hold off and wait for this one. Um, and the waves come in and they come closer and closer. And they come closer and closer until um, you can lock on to the wave. So they come closer and closer, and then at a certain threshold where they become more visible, you can click on it, boom, and then it's actually locked on. Okay. Oh, well, then it's actually locked on. So now, boom, I have locked on to this one, and therefore my order is placed. So I want to show you basically how it would look on a chart. Okay. So, um, take this chart for example. You can see, um, just ignore all this. That was my heat map of my probability of the trade working out. Okay, so when a wave appears on the the game is when this candle is formed. This one. Um, is when this candle is formed right here. And that means this candle has to be printed. That means it has to be after 1400, right? It actually has to print, um, and then if this is qualified greater than 2 standard deviations, so basically the candle body is greater than 2 standard deviations or average true range. I don't know. I don't know what I'm using yet. True range or candle body. Doesn't matter to me. It both is measuring volatility. If the volatility is greater than 2 standard deviations, and it forms a strong move in one direction, such as this one, and the upper wick is bigger than the bottom wick. If all of these conditions are met on this time frame, whatever time frame it is, that doesn't matter. it creates a data point this high. This high is created, and the the wave is created in the video game. Okay. Now, the size of the wave is dependent on the size of the the bull fib right here. This is what I call a bull fib. Okay. This bullish green bar. This initial bar that's been sent to the video game. Um, Gosh, man, I can't even fucking talk. Dude, I can't even talk. Well, this bullish bar is sent to the video game, and the video game prints a wave. And the wave is as big as the candle body is over 2 standard deviations. So if it's over 2 standard deviation, it has a default setting. It has a default wave look, view, whatever. We can have 5, let's say we have 5 different wave um, wave looks. So like the length of the wave measured from the top to the bottom of the wave is say 10. This one's uh, this one's 9, this one's 10, this one in the distance is 7, whatever. This one's 5. He selected a 5. The player, the surfer, selected a 5, okay? And how that goes into the chart is this bull fib is it's of the bull fibs that's pulled into the data set, which is greater than 2 standard deviations. If they are pulled in there, then we'll take an average of all of those, okay, all of those pulled in. And if ones are over 3 standard deviations, then it's probably going to be looking like an 8, a 7, or a 9, or a 10, higher on the spectrum, and, and therefore a bigger wave. Now, if it's a smaller one, like maybe this one's just barely over 2 standard deviations, then it will be looking like an average wave, which is this like this size, right? And then the player can see that. And not only is this as a function of the true range, or greater than 2 standard deviations, it will be a volume weighted true range, or a volume weighted candle body. So that means the it will be, it's the same exact thing as what I just said, but there will be a uh, volume will be built into the equation, okay, and built into the index, which is not, it's not difficult and it's not confusing. It's just volume weighted true range. So true range with volume. If this candle has low volume, then it'll be counted as a smaller candle, and the high would probably be here or whatever if it's a super small volume. But if it's above average volume and this is above average, then the high will be plotted like up here, and therefore it's a stronger bar and therefore a bigger wave. Okay, so that's how that function works. Um, Now, the strategy is the wave is seen, and that therefore everything is set. The strategy is that this bull fib is established, and then the very next bar, it breaks this high, and we enter in. So we actually enter in the market right here. That's the break. Now, if the player has locked onto the wave, and this entry bar is breaking this high, and it actually breaks this high, this auto fills him. It'll auto put him on the wave. So it will automatically um, go to a different screen, and he is balancing on the wave. And therefore, he's actually entered in a +1 position on the legitimate chart. Okay, he's +1 right here. And we're talking this middle bar, the bar that I have circled. Okay. Um, and in my experience, in my data that I have collected, the initial move happens almost immediately, and it's hard to get filled sometimes, all your orders sitting right here. Sometimes it bursts and doesn't even fill any orders at this right above this high, because it has to break this high to be filled. But if they're not filled, um, obviously the wave fizzles out and then they're never on the wave in the first place in the video game. But we can talk about all the other exceptions later on. What right now we're talking about a legitimate uh, gameplay. Okay. Um, once this high is broken, we long, and then we're gonna ride until it can't ride anymore. Okay. So we're gonna ride until they're either on this chart or the 3 minute chart. Um, Red bar is followed by another red bar that breaks the low of the red bar. So we would enter in +1 right here, and then we would ride, and the player would see this entire time that it's riding. He would need to be balancing um, on the wave, and it'll be like some type of fun balancing. I don't know, where it's two-dimensional, so we have to think about it that way. It's gonna have to be like something like a, you know how Temple Run, you have to swipe left and right, avoiding things, and like somehow people like that. Um, in this case, it would be something similar where maybe you swipe left and right to maintain balance on the surfboard. I don't know. I don't particularly care too much about it. I just need to make it where sometimes people can fail at it and therefore exit their position. And then sometimes people, yeah, and then sometimes people can succeed. And then you can pick your difficulty, maybe. I don't know. But anyways, that would be a different screen in the video game when they're in the position. This is before the position. When they're in a position, it'll be a different screen of they're riding the wave and they have to balance left and right. Um, Now, when they're in a position, they're riding the wave. If they don't exit due to they fall off the surfboard and they play the game wrong, right? They mess up. If they don't exit manually, it will actually exit for them. The wave will stop for them once um, once two red bars form. So, and the conditions that have to be met to exit a position is um, there needs to be a red bar. So this one printed red, right? It doesn't matter the view, the length, the size of the wicks, or the candle body, doesn't matter. It has to just be red. Now, once red, it forms a low, and on the very next bar, if the very next bar breaks that low, we have momentum down to the downside. Because remember, this makes a lower low, or yeah, this makes a low, an established low, and then this next bar makes a lower high, and then a lower low, and it breaks that low. It's showing signs of downtrend, and then we exit immediately. The wave and momentum stops, right? So um, that's why the position gets exited automatically, and the wave in the video game sizzles out. It it goes down, and then you have a successful ride, but um, the trade is done, and therefore the wave is has no more juice left in it, and that's how surfing is, anyways. So um, in this case, we did +1 there, and then we went 0, we went flat here. So we got a positive. If you held the wave in the balance, you would have gotten a positive return here. You would have gotten a positive return. Um, and how all of this is going to connect. The back end stuff. This is how it'll work. The data flow will flow in this fashion. Okay. The TradeStation or any real-time futures data will present open, high, low, and close for the time frames that I select. Um, and there's two data points that I really need to track. I need to track the bull fib, which includes the bull high. So in this case, the bull fib is right this green line, and then the bull high is this one right here. Okay, because that's going to be my entry price. Oops. Oh, sorry. Now the next point that we have to track is the real time. This one's going to be harder because it's going to be real time, because bull fib is going to be after it already printed, and therefore it's just going to be one transition of data. So the bull fib is going to be printed in the bull high. The bull high is what we need. The bull high is uh, sent to the computer or app game, and that's it, right? And then the real time is the hardest part, in my opinion, because that has to be fast, and it has to be real time, and it has to be linked to the graphics of the video game, altering those graphics real time. Okay, and then the real time data we actually need is the amount of space from the bull high to the entry bar price, which would look like this. Okay. Um, okay, so the bull high is right here, right? We know that the bull high is right here. We know that the bull high is here. But it at this point it would be a red bar right here, it would go downwards, and then at this point in the video game, the picture would look something like this. The wave is actually the wave would be maybe going back a little bit. No, it would be actually being more and more transparent. So the more this the more this entry bar's price is further away from the bull high, the more that this wave becomes transparent, and therefore they will select the wave, because therefore it's most likely not going to break this bull high. Now, if this entry bar right here is going upwards and it is within this wick, oops, it's within this wick and it's getting close to the bull high, it's looking like it might break it. In the video game, the wave will look less and less transparent and more clear and more like a wave that they want to take, and therefore they'll select the wave. And once they select it, it will auto fill them, and it will auto put them on the surfboard in the video game. It will automatically um, put them on the surfboard if this um, line is broken on the upside. If it's broken, um, we enter long, and therefore they get on the surfboard. And if yeah, and then that's how it's initiated. And that's why we absolutely need the real-time data between the bull high and the entry bar price, which is the bull high and then whatever this current bar's price is at, fluctuating here, resulting in the images of the wave becoming less clear and more clear. Okay. Um, I think that's all I had. Um, the data would flow from TradeStation or the futures market data, and we get that real-time data and the bull high, and we send that immediately to the video game. That data is converted into waves of the video game, and therefore um, it's transformed into the size of the wave, and then which converts into like pixel length and all that crap. I don't know how to do any of that, but that data needs to be translated into um, a visualized 2D, very quick, not it doesn't have to be pretty video game, basically. And all it is the wavelength, which is the size of the wave. I'm sure that a video game can convert a data point from 1 to 10, because I'm going to index this data on a basis of the average being 5. And if it's a 10, meaning it's a huge wave, then I'm sure that they can index their pixel length to be 1 through 10. I want it super simple. Super, super simple. After the player sees the video game, and they see the size of the wave, and then they can actually have input here. They click on the wave, they push their button, or they push the screen on the wave, and a little outline goes around the wave, just like this I showed you. It outlines the wave, and the player knows that this wave is selected, and they want to take that at the next available opportunity. Now they have to wait for the wave to come to them, just like surfing. Then as soon as they lock on the wave, the order is placed with dormant trading, which is the FCM, which basically you need $1 million of capital to become an FCM. So that means I would have to um, outsource to them and let them provide the $1 million and collect commissions, or a portion of the commissions, I believe. But I would partner with them, okay? And then they would stage the orders and send it to the exchange. Now, once the player has the wave selected, the order is sent and staged to dormant trading, and a stop market order would be placed on the bull high. And if the bull high is broken, they are immediately filled, and then this data that they are filled is going to convert. That data is that they are going to, it's gonna convert right back into the video game, okay? It's gonna convert right back into the video game, and, oh no, yep. That data is going to convert right back into the video game, and then the video game is going to resemble, or the video game condition is going to be equal to true now that they are in a position. So the video game will show a different screen, a screen of them on the surfboard, and therefore they are initiating the balance game, whatever that may be. And then if they fall off the board in the balance game, that order will be sent the same passageway to dormant trading, and then the dormant trading will cancel they will immediately market order exit their position. Now, if they stay on the balance game and they don't fail at the game, the stop market will be placed on the chart, and the stop market is this low. And if this low is hit, the wave is done, and then the player loses loses the money. Also, if the player goes up and then it goes down, and it and actually forms a bearish signal, meaning a red bar, and the very next bar is red and it breaks that low, it will automatically exit as well. Okay, so those algorithms are set up um, as a higher priority than the player's input. Okay, but the player's input, if that input is happening before one of these things happening, the the 2BB against me and then the stop. If the player input happens before that, then the player input will be taken and a market order will be placed, um, and they will exit the position immediately. Okay. Now the strategy goes, I have to mention that once this bull high is broken, I'm doing a trick. It's similar to a trick, is where I buy a mass amounts of contracts. Like, we're talking 100 contracts, and we get rid of 99 of them at the nearest available exit point to basically give us a risk free on that one contract. So if we were to convert this to, say, let's say 10 contracts, we would get rid of um, we would get rid of uh, we would get rid of 9 of them. So we only keep one to ride the wave. We would get rid of 9 of them at the initial movement out of this bull high. So we buy and then we sell almost immediately, um, to be to provide a risk-free opportunity for the player. Now, this strategy, the percentage of times that this target will be hit is extremely high, where it's going to just need it just needs less than 10% of the what we're risking. It needs to hit the target. Okay, very high percentage chance that it'll hit. Okay, once it hits, we don't have to worry about anything anymore because we're risk free on the trade. If it comes all the way back to our stop, we're net zero on the trade, and therefore the player is like, oh well, I rode the wave a little bit and then I'm done, right? And I didn't lose any money. That's fantastic. It's a tie, right? And in this case, the wave actually uh, fell and he got out and he still made money on it. Not only that, but he made this, the risk-free money, and he made the money on that one contract. Okay, so we're risking 10 contracts in the initial part of the trade. We're exiting 9 of them at 10%, at 10% of the rate, risk box for the target, and then we're risk-free on the trade for that one contract, and then boom, we'll ride the wave until it goes against us, and then the wave comes crashing down, and then the player will see that the wave, they'll see that the wave is fizzling out, and then they decide to hop off, or like it'll hop off for them, and then that's it. And then they check their account at the end of the game, and they see that they've made money, and they're like, dude, I was playing a freaking surf game. How am I making money right now? And that's exactly the product that we want to provide. So I think this is phenomenal.